Hi guys, so this is a trade that we caught in the London session Monday, September 1st, 2025, and it's a fairly simple and a mechanical, really textbook entry for us that we teach in Fortitude FX. This is the entry model LC EM liquidity candle. So let's get to it. So the yellow highlighted section here is when my London Open starts. So that's about 11 o'clock. Right prior to 11 o'clock, what I notice is that we have a giant bearish candle with a strong bearish close. I mean, there's not even a wick at that bearish close, right? So if I zoom that in, and you see that bias coming in, right? Now, is it broken the low of this candle? No. Ideally, if it had broken the low of this candle, that would have been a perfect A+ setup, given the setup that we'll get here, but it wasn't. But still, it is a candle. It's worth investigating. It's a big body, solid close, solid bearish candle. So let's move to the 1 minute. Now, does it tell me, have I broken structure on the 1 minute? If you're going to ask me internal structure, so not the larger swing structure of the 1 minute, not the larger internal structure, not the internal of the internal structure, so the small internal structure, but what it has broken is given me first signs of fractal structure breaking on the 1 minute chart, right? So what is fractal structures? Fractal structure breaking is smaller than the small internal, right? Because it's candle by candle dependent. So here what I mean is, if you look at this, high, low, high, low, high, low, high, low, high, and then it starts breaking this low here, then it starts breaking this low. It had a reaction that tells me this is obviously a zone, and then it broke this low right here by going down here, yeah? So having said that, it has given me first indications that we are having structural breaks at this point right here. We are having structural break at this point right here. So for me, it's an early indication. Now, does this force me to get into an entry? No. Does this excite me? No. But what it does tell me is that we've had the first fractal change. The trend is strong low. Now, if it meets perfectly my entry model criteria, should I enter? And yes, the confluence is on my side. The probability of it going in my direction is high. We are exactly at London Open, so why not? So let's look at bar by bar replay till what happens. First thing what I do is always mark the red box around the first 15-minute candle and the second 15-minute candle that I want to study. And we go bar by bar. So that's first, nothing happening here, nothing happening here. Now this high took the high of the previous candle, so it is a sweep, so to speak. It is a fractal high. It is confirmed a fractal high when it breaks this low right here, yes? So this low gets broken, not here, here. So once this low goes, this is a confirmed fractal high. Now what I'm waiting for is for this to get swept and go into a zone which is marked in this red translucent box. This is my supply zone, and it is a clear zone because it is a clear pullback and then push down, right? So let's move on. And at this point in time, my first 15-minute candle has closed, and my next candle is about to start at 11:01. So you look at the time frame here. That is 11:01. That is my next candle starting. So before the next candle even prints, I've already marked my zone here. I've marked my liquidity points. All what I'm taking is, does it sweep this? Yes or no? Does it match, mitigate this supply zone? Yes or no? Do I get an entry criteria? Yes or no, right? So let's move on. Does it sweep? Yes. So it not only sweeps this, but it closes bearish strong. Yeah. As soon as it closes bearish strong, it has mitigated my supply zone. I am placing a stop order entry at the bottom of this candle, or I'm doing a market execution covering the high of the supply zone, covering my zone. And basically at that point, I get triggered as such. and then we go all the way down. So at one, you can manage your trade however you want to. You can go break even at 1 hour. You can wait till this structural low goes and then break even. You can actually break even that as soon as a bearish candle closes completely in green, go break even, right? So look at this. If I had closed my stop loss to break even after the close of this candle where my finger is at, or my mouse cursor is at, price never went and touched my stop loss. It just went down straight from there. And this is how we got into the trade today. Yeah. So again, it was a very simple, easy trade. We got the first signs of fractal structural break. Fractal structural break again is smaller than the small internal structure. This is structural breaks on 15-second chart. It is giving me a giant push. I want to see if that push continues, and it very well does so. What happens thereon is that I'm waiting for the first 15 minutes to close, and I'm marking my zones, my zones and my liquidity points, and I'm waiting to see if that gets swept. Yes or no. It does get swept. We get a reaction, stop order at the bottom of this candle, and boom, we have a straight 3.89. We had a similar trade on gold also on Monday and during London session, but now look at this bearish candle. In contrast to EU, where it wasn't closing below the wick of the previous candles, this one took out 1 wick, 2 wick, and closed fairly strong all the way down into a bearish trend. This for me is a candle that I get excited about because it is breaking structure on the left hand side. It is showing me a convincing change in directions. It is showing me that a trend has established. It is showing me strong momentum with a strong candle close. I really want to know what is going to happen in the next candle, and my money goes always that the next candle is going to follow the bearish direction in alignment with the first candle. So how do we take advantage of the entries, right? So here, when I look at the first, the 1 minute chart, we can clearly see that this low created this high. And now I'm talking about the small internal, yes? I'm not talking about the fractal. The fractal would have been this low breaking, this low breaking, this low breaking. But I'm talking about the small internal. This low created the high, which got completely taken out by this strong body close here. So this for me is a break of structure. I'm convinced momentum is downwards. I want to play at London Open, price going down, waiting for my entry model. So what do I see first? As soon as my candle closes and the next one opens up, what am I looking at? I'm marking zones. So my first zone was here. It was too far off and there was nothing in terms of liquidity, right? So everything is efficient price action. This would have been a zone if I were to mark before the open of the second candle close. And all I could think was that if this high gets broken and is swept, then I need a reaction from here before I get an entry while mitigating this, right? So if I get an entry before I mitigate this and this has been swept, this liquidation for me is no go. I sweep this, I get no entries over here until I mitigate this, and then I get into a trade setup 100%, and that is the way to go. But what I noticed was that there was another zone that was created. While the candle was being formed, this for me was a liquidity grab. So this for me was what? This would have been my liquidity that I'm waiting for a sweep. But while the candles are being printed, this high broke this low and then it got swept. So my liquidity, strong liquidity, because this high broke this low, got swept here. And then this zone, which initially I thought the high of this would have been a liquidity grab, this became a zone in which price is reacting from. So now I have two options. Either I could miss this entry and wait for this to be gone in anticipation that it will mitigate this, or I look at my strong candle close. I'm thinking the price is already reacting, and if the low of this candle goes and this point is broken, I get break even. As soon as I get break even, my risk is off the table, and then I can ride the trend downwards, right? So this was an easy 3.3 hour return. I usually go for 2 or 3 hour fixed hour. and manage appropriately your take profit or partials or break-even points. But it is a very simple textbook entry. I took the risk knowing that if the price goes here below, I'll break even, and then my risk is off the table. Now, if it breaks even, then I have another opportunity. If it never came up to this zone, I don't care. I will have the next candle to work with. All right, guys, so let's look into some of the entries on EU and GU for September 2nd, Tuesday, 2025. And we had some fantastic opportunities, albeit you'll have to wait a little bit to have those entry models develop. But it was a good trading session both on EU and GU. So coming into my session, 30 minutes before the session starts, I noticed a giant bullish candle. Obviously, it's still within the range, but coming close into the London session, I did not take this trade, but just to analyze on how powerful this entry model is, EMLC. I will share what it is with you, but if you want to know more and want to get regular updates, do join my Discord or my Telegram channel and get in touch with me directly. We can talk about mentorship. I don't charge anything, obviously. So if this is something that interests you, do join my social media. But anyway, so over here, I marked my candle as such, and I'm looking for what? Before the second candles develop, I'm looking at my liquidity points and I'm looking at my zone. So what are my liquidity points? This low is a liquidity point for me because this low was responsible for breaking this high and then it got swept. I did not get any entries, which was the break of the top wicks until I hit the zone. This is definitely a valid demand zone because in essence, this inside bar is indeed a pullback on lower time frames. So if you're looking at 15 seconds, it is definitely a pullback, a valid zone for me. And the way the candle was formed, so price went in and it had a massive rejection at this point, yeah? And I just put a stop order entry at the top of this candle, hoping to get tagged in. So once I got tagged in and broke this high over here, I was break even, just because this was before the session. Again, mind you guys, I have not taken this trade, but I would have been break even over here. I would not try 1 hour break even just because it's an aggressive entry, but it did run to a nice 3R, yeah? So let's move on towards the end of the session here. Now, this was a fantastic classical textbook entry, and I've trained my mind to look at these entries and identify them so quickly that I enter literally blindly because I know the edge that I have on these entries. So we have a giant bullish candle, a strong bullish close, breaking the top side of the wicks on the left-hand side. So we definitely have a structure being broken on the 1 minute chart. High, low, high, low, high. So definitely this is trend. And now what I'm anticipating is that we have a low and then we have a high. Just continuing the market structure, right? So here, what do I notice? We have a clear demand zone. We have a clear low, a strong low that broke this fractal high and then it got swept. The minute it got swept, I had my entry right at the top of this one. Did not give me an entry because the low of this wick broke here first. So what I did was then I moved my entry as a stop order on this candle. It tagged me in and banger, was that a good trade. So this was about, in totality, about a 9-hour trade with a 4.2 stop loss. You could have broken even over here. You could have targeted 2-hour, 3-hour, 5-hour, but it was a massive trade. Another opportunity that we saw here, this was again textbook, and I would take these entries even if they're outside my sessions. I would look at how cleanly is my setup being developed. So, I mean, look at this, guys. You have on 1 minute time frame, clear structure to the downside. So this low broke this high. You had a reaction from this demand, this zone here. Let me mark those for you. So you had a reaction from this right here, and it clearly had a reaction and then it broke that demand zone. So price is killing demand zones. It's just wiping through it. So it's definitely a downward trend. High, low, lower high, higher high, lower high, and then you can see that, yes? So I identified this just by one candle, looking at what it's doing to the left-hand side of the wicks. It's breaking those wicks, strong body candle closes. I mark my box around it and I wait for my liquidity point. So this high broke this low right here, the bottom of this wick. Let me zoom that in for you, bottom of this wick, and then it got swept. The minute it got swept, did it tap into my zone? And this is important for me. If it did tap, I would have placed my entry over here, but it did not. It broke the top of the wick first. So I wait for this candle to close, this bearish candle to close, put a stop order at the bottom of this wick, covering my high, 5.6 pip stop loss, and that would have given you a handsome 3R at least, 2R, 3R, and in fact it was running down all the way still to get me a 6R, almost 5.6R trade. So that is EU, 3 trading opportunities, all of them winners. Let's look at GU right here. GU also, we didn't have any opportunities in the London session, but looking at New York session, there was definitely an opportunity. And let's study this. So over here, what is going on? We have clearly a strong downward momentum shift. Yeah, momentum, not shift, momentum, strong bearish downward momentum. Now, this candle is responsible for what? It took the low and then it took the high, right? So this is an engulfing bullish candle, and an engulfing candle is a pretty strong sign that price is now starting to reverse its trend. So when I saw that, I would have liked it to be a little more stronger bullish close, maybe at the top of this wick, for a really, really confirmed confluence. But it did not, which is fine. It's still an engulfing candle. So you mark your red box around this candle and cover the start of the second 15-minute candle. And what I'm looking at is what? My liquidity points and my zone. I have a very, very clear zone mark right here. And the reason for that is it is a sweep zone as well. So it took the low of the previous candle and then it closed bullish. This for me is a pullback, swept liquidity, went up. So this is a zone that is a strong zone, and I marked it like as such. Price went into it and quickly pushed away. Definitely orders sitting in the zone for sure. But it also gave me a nice liquidity point, right? So when it crossed this low, broke this high, this fractal high, and then it got swept. And it got swept in the sense that it wicked it, and then the price went higher and closed above this point, right? So it did not close below this point or break the zone. The minute the zone broke, or if this zone would have broken, I would have not been interested in this trade, right? So we also have a demand chain sort of forming here. So if you want to look at this way, there's this demand chain, and this comes in and it goes over there, or you can even close it like this, and then this gold in, and this got swept in and closed higher, swept this and closed higher, did not close below. So once that happened, I placed my stop order at the top of this candle, hoping to get tagged in to once the top of this wick is broken. Once the top of this wick is broken, I'm happy days for me. My work is done. All I am now hoping is for the trend to continue in my direction and to give me a winner. Hoping would be the wrong word. I'm pretty confident because I know the edge on this entry. I have hundreds and hundreds and hundreds of back tested, forward tested, and live data that I've seen. So for me, I blindly enter with the confidence that it's going to be a winner. If it's not a winner, oh well, we have another day, right? So for this trade, actually, if you had gone just till this point, it would have given you an easy 2R trade. You could have gone 5R on this one, but it went all the way to almost 15R. If you had the pulse to play it this long, or if you wanted to capture any structural points and follow break-evens or trailing break-evens. Now, I haven't looked at any of this, but we can quickly do so just in live, not live, obviously the price is played out. But I don't know what this price action looks like, so I would have done this. The reason I chose this candle is because it broke the low of the previous wick, and then we can quickly see if there was an entry here. Look at this price action, right? I mean, does this look any... This is a mess. I mean, I can really go because I know the mitigation cycles of candles and what the wicks are doing and what is going on in here, and I can articulate that pretty nicely. But overall, this is garbage. There is no nice zone to trade from. There is no strong liquidity that was taken. So for me, I stay away from this. Let's look at this one right here, even though I did not close the wick, just to give you an idea. So this one, there's definitely a trade here. Absolutely. So look at this. So price is obviously going in a downward trend. This high created this low, broke this structural point, but it did not break and close above. So it just wicked on top and it did not close above. So the structure is still bearish for me, right? So where's the zone? This would be the zone right here, entire zone. And where is your liquidity point? My liquidity point is right there. And I'll explain this in a minute. Template, liquidity. Why is this my liquidity point? Because this high broke this fractal low, right? And then it got swept, right? So this high broke this low and then it got swept. It got swept in a nice manner, which is that there was a giant wick which had a reaction from the zone and it closed bullish. Even though it closed bullish, it did not close bullish above this wick right here. So it definitely is a sweep. You could have entered very nicely a short position as a breakout of the low over there and covered your high. Price would have tagged you in, gone up and tagged you and back again in the green, and this would have been a nice 5-hour trade. Simple, nice 5-hour trade. I just wasn't at the charts at this time. I couldn't care less, but there was an entry right there and then. All right, guys. Talk to you soon. Bye.